everybody, welcome back to Metals and Momentum. My name's Anthony and I'm recording this on Tuesday late in the night here, and I'm just watching the price of Bitcoin, and I'm also seeing some other things that happened today, and I just wanted to make this quick video. I want to talk about three stocks right now, or I guess three different types of assets. Bitcoin is going to be one of them, not really a stock, but I guess we're going to monitor that price, and I'm going to show you what's happening on the chart. Something is very interesting is happening right now, and I'm also hearing that Michael Saylor is becoming a seller of Bitcoin, which is just so wild to think about. This guy has just been like the king of buy and hold Bitcoin forever. In fact, don't just buy and hold Bitcoin. Sell everything you own, take out all the debt that you can, and buy Bitcoin, because the interest rate on the debt and all the other assets, that's all going to get soaked up by Bitcoin going higher. And what is happening on Bitcoin right now? No, it's not going higher, that's for sure. I want to go over the SOX ETF. I want to go over one other position that I am currently in. I just opened up this swing trade just a couple days ago, and I want to go over that because I think a lot of money is going to rotate out of these crazy tech stocks that are just going up and up and up eventually, and then go into other things. And I think the way I'm positioned right now is going to probably benefit from that money moving out of AI and semiconductors and things like that, and move over to some of the positions that I am currently in right now. But first, let's go over Bitcoin, because this chart is very interesting right now. The Bitcoin chart has been trading what is in a what you would really call a bear flag. So basically, you are moving downward, and then you are chopping sideways and moving slightly upward and chopping sideways. Once you break down here through the bear flag, then that is a signal that you're going lower on whatever asset that you're actually looking at. These bear flags, we've been seeing them all year on a number of different things, and every time they break, like for example, oil was the perfect example there. You break the bear flag and then you just go lower. So this is actually happening on Bitcoin right now. A huge down day today. This, I believe, was like 5% or something like that. Let's measure this out. Yeah, the 6% drop on Bitcoin near the end of the day there. So that's pretty crazy. And as I'm recording this at 11:24, it looks like that selling is going to continue on. We'll see what happens in the morning, of course. I'm kind of anticipating at some point in time, we will probably bounce and look to actually retest this upper portion, or I guess this lower portion of the bear flag. So this is very standard in technical analysis. It might actually give us an opportunity to increase the inverse shares that I just purchased actually today. So this is what I'm kind of watching for. Are we going to actually touch 60,000 and then move upward? I'm going to actually turn this yellow because I have a lot of red lines on the chart here. But are we going to test 60,000 and then make a move upward, or are we going to get a little purchase or a little buying happen in the price very soon, and then maybe we start to increase those inverse shares? I'm not 100% sure. That's why I am jumping in right now, because this is a confirmation of a breakdown out of that bear flag. So this right here was the breakdown, and then this right here is the confirmation, huge confirmation actually. So that move is happening very quickly. We'll see if that selling pressure continues. But one of the things that I'm actually looking for is my first target is going to be about 60,000 on the price of Bitcoin. That would give you the support right around here. And then there is another key support line if you just go back a little bit further on the price of Bitcoin here. This whole section right here, this was all support. You touched it a number of different times or very, very close to it. And even if you wanted to put in another horizontal line, like say like right here, like look at how well this plays out, right? You got a back when we started forming that bear flag in February, you were starting to dip right down to this area of support and then get that bounce off of it. So I'm not really sure if it's going to be like 60,000 or just under 60,000, but ultimately I will probably remove my inverse shares on Bitcoin at about 60,000, and that will be a decent gain. So let's actually draw it out from where we are right now. We can actually measure this move. So if we're getting short right now, then you got 10%. Like I said, I joined it right about somewhere around here. So we're actually in the money right now, which is a great change to some of the other positions that we've put on in 2026 here recently, most specifically talking about like this month, really. So you got a 10% move down, almost 11% move down on the inverse shares if you wanted to play it like that. So I'm looking for 60,000 and I will remove the inverse shares off of that. But really, it's surprising to see that Bitcoin is dropping so dramatically when pretty much all the tech stocks are really just catching a bid. And if it's not a tech stock, it's either going to be a semiconductor or like an AI kind of company. This is really soaking up a majority of the movement in the market right now. I was just listening to another trader talk, and he was saying it was something like 40% of the S&P 500 right now is like 15 of the biggest like AI and semiconductor stocks, which is unbelievable. And it's just that one single sector that is lifting up the entire market. If we pop over to the S&P 500 here and just take a quick peek before diving over into SOX, it's actually quite amazing, this dramatic movement that we are seeing. So we've just been going crazy on the S&P 500, slight pullback right here, created another support line that we can follow, and we're just waiting for this to just roll over and break through this support line, and then maybe we can experience a little bit of a breather in this market, which would be fantastic because, oh my gosh, like I can't believe how high the S&P 500 has just run from the bottom here. What is this movement now? Like we're up 20% since like the beginning of the Iran war, which is unbelievable to think about. Who would have expected that, really? But the SOX Semiconductor Index, this one is up even more. If we take the low here, and we are now up 93% since the beginning, since the end of March, which is unbelievable. What a crazy run. And I'm looking at this stock and I'm thinking to myself, this is interesting. And I'm noticing a couple things on this stock. So one of the things that I was looking at is, are we going to create this would be actually a this would actually be a bull flag. And I was looking for this to actually trade downward and sideways just a little bit longer. But that didn't end up happening, actually. I ended up taking a very, very small loss on inverse shares here. And then it started to gap upward. But what I'm noticing is you have a gap right in this section right here. This generally will signal that it's like near the end of a run. And we were essentially there today, except there was some news where like some CEO of one of like the crazy AI stocks is saying that like he's going to be the next like $1 trillion company, and that essentially moved the market, which is so crazy to think about. But what I think this is an exhaustion gap right here, and I'm looking for this to actually roll over. But one of the things that I was kind of thinking about on this is if this is an exhaustion gap and we're just getting one final push upward, what could also be a little bit of a signal is if we maybe even push up just a little bit higher and then starts to float downward. One of the things that I would be watching for is a very serious head and shoulder pattern, and this would actually take us down to somewhere like this. If my price target right now is 84.68 on the SOX index, one of the ways it could actually get there is if this did actually create a head and shoulders pattern. What we could do is, let's say it's somewhere like this. This is like the top from the neckline somewhere around here to the neckline, which is right here. So it would be the top of the head to that neckline right here. If that were to actually pull down, we'd probably get a bounce on this support line where we're actually creating that the bull flag, and then get a little bit of a bounce. But what that would actually do is create a head and shoulders pattern, and this would actually be the signal for this shoulder to actually play out. So you'd get a shoulder right here. Maybe if we do start to decline, then we're probably going to get a bounce somewhere around this support line. We create another shoulder, and then that would take us down to maybe 84.68. And that's how we could actually get there, which is super interesting. I think this last move that we saw, it would be yesterday by the time you're watching this last move here, this is just mad. That's madness. Like, this is just stupid at this point in time. And if you were to take that head and shoulder pattern, it would actually take you from the neckline to actually take you down to the 200-day moving average, which is so close to that 84.68 kind of price target that I've actually set out on the SOX index. So we're on the edge here, and if the SOX index starts to roll over, it's actually going to be a signal that a lot of money is going to start to move out of semiconductor stocks and move into safety. And where is that safety going to be? Well, one of the positions that I've actually just put on, I'm going to close down this and go over to XLP. This is the State Street Consumer Staples sector ETF. This actually did start to create an uptrend here, and I'll explain this chart in a little bit further, but one of the main points that I want to get across here is I think money is going to start to rotate out of safety, or out of the crazy tech stocks, and move to safety. And especially as the SpaceX IPO is about to come out, I think it's on the 12th, if I'm not mistaken. If the money in the market is going to move into the SpaceX IPO, it's probably going to de-risk some of the portfolio where you've had the most amount of gains, and then move that fresh money that you've essentially gained in some of your big winners and move that over to maybe a speculative position. But then you've gained so much on your winners that you're probably going to look to de-risk the portfolio. So some money is probably going to go into the SpaceX IPO, but some money is also probably going to go into something that is safe and considered like a blue chip. Maybe the consumer staples sector is about to get a bid. But one of the things that I find super interesting on this chart here is one, you've had the 50-day moving average actually cross that 200-day moving average. This is a bullish signal right here, and you can see what actually happened here. We got a massive move to the upside, and then a pullback. But one of the things that's so interesting about this is we've pulled back to the 200-day moving average, found support, and then started to create an upward sloping channel. Now, we did break out of that upward sloping channel just in the past like 2 days. So this would be actually a confirmed, well, actually not quite a confirmed breakdown, because in order for this to confirm, you would have the breakout of the channel, and then you'd actually want to close underneath this, the bottom of that candle right here, which we did not do as of June 2nd. So I think this is actually going to maybe turn around and actually have a little bit of a bounce. This is an unconfirmed breakdown in the chart of XLP. And I think money is going to start to rotate out of the super risky stocks, the stocks that have done absolutely like just unbelievable gains. People are going to look to preserve those gains in something else. And it's going to be, I think, in something like this XLP. And I also think we have a number of positions on right now that pay a good dividend. They're undervalued, and they would be considered somewhat like blue chip, I guess, somewhat blue chip kind of stocks. Just a few of my picks would be considered blue chip, but we're also in very undervalued sectors right now. And this is going to be very interesting to watch. Is SOX going to roll over, create that head and shoulder pattern, and then money is going to maybe rotate into some of the sector or some of the positions that I'm actually in right now? What I've seen on a lot of the charts, and this is actually getting pretty insane. I keep charting things out like I've been doing for the last year or two, really relying heavily on technical analysis as we enter into a super hyped stock market. We'll call it a bubble because it is what it is, right? But one of the things that I'm seeing is technical analysis is just not working like it has been working in the past year. Over the last couple weeks, a lot of my levels are getting pulled right down to and then slammed right through. Or if you were looking for that higher level to hold and actually be somewhat of a little bit of a resistance, it's just slamming right through. And this is especially true for a lot of these like semiconductor stocks and a lot of these AI companies. But what's so unsustainable is the fact that one sector, one type of stock is actually holding up the entire S&P 500, which is supposed to be the top 500 companies in the US market. But lately it's been acting essentially like the top 15 because a lot of the other stocks that are outside of that those 15 companies that are doing really well, they're actually going down or not doing anything, which is unbelievable to think about. And at some point in time, this is going to reverse. It makes me think that maybe I just need to give this a little bit more time, and this goes for a lot of my positions. I'm thinking about just removing the stops on almost all of my positions and thinking about maybe in the fall, we're going to see that little bit of rotation happen because right now, the technical analysis, it's getting very hard to read. And these levels on some of my stocks that I've been following for a long time, and like they would be like pretty reliable kind of areas of support or areas of resistance. It's not working like how it's been going in the past little while. And really it's because of these AI stocks, and money is just going crazy into the AI sector. So I just wanted to make this video to just go over some of those key holdings there. I am actually inverse Bitcoin now, which is I think going to do well, but I mean, in this market, it's hard to tell. The technical analysis on Bitcoin, it's holding up. So we'll see what happens in this inverse Bitcoin kind of play. And I think we're on the edge of seeing a capital rotation from the AI companies into what I would consider blue chip dividend paying companies that are maybe a little bit undervalued and a little less risky compared to some of the multiples that you're getting on AI. One thing that I should actually maybe go over before we end here is the 10-year yield, because this is a super important kind of thing that we should be watching and paying attention to. Right now, the 10-year, I guess over the last week or so, essentially anytime you get a rise in oil, then you'd also get a rise in the 10-year yield. And we've seen a little bit of a bump up in oil. Now this line right here, I would probably consider this resistance now. So I wouldn't be surprised to see a little bit of a pullback. But after we pull back on oil, what is going to happen with the 10-year yield? Well, honestly, I think what's going to happen is oil is probably going to come down, but those 10-year yields, I think they're actually going to go up. And right now we could actually, so I drew this out a little while ago. I thought it was going to come back here, have a little bit of a bounce. Maybe this would be like an inverse double bottom, and then we start to move higher. But I'm thinking that we're going to find support right around here, and then we are going to look to move higher. And if all that money is sitting in those crazy crazy PE ratio, high risk, high reward tech stocks, super overvalued AI companies. Once that 10-year yield is maybe once it starts to rise, what we're going to probably see is capital rotate out of some of the crazy tech stocks and out of the S&P 500 and actually go towards that 10-year bond. Because if you can get like a 4.8% yield on a 10-year bond, that's going to attract some money. Like we are almost there at this little peak right here. We're at 4.6 on the high. And that high has not been seen, since like 2025, 2024, 2023 here. But going back even further, if you just like go back here, like the last time we saw this high was back in 2008, which is kind of, I mean, the parallel there is just like, that's not great. Like, that's not great whatsoever. Everybody knows what happens in 2000, what happened in 2008. And if we start to spike on yields, then this is going to put pressure on the market. We'll see what happens. I mean, the market is what it is right now. I think, like I said, I'm just going to start to position myself in a be right, sit tight type of mindset. I'm going to take actually a step back. I'm going to peel some of the stops off that I have on my positions, and I'm just going to wait this out and see what happens come fall. Because I think come fall, a lot of the positions that I have on are probably going to benefit very, very much. So we're going to see an increase in food prices. That's just like a given. Because, you know, the only thing that can happen once the 10-year yield starts to spike to 4.8% or something like that is like the government's going to essentially come out and start to do yield curve control. And what that is going to do is it's going to increase the currency supply. And all these soft commodities that we've been talking about for a little bit of time, I think uranium is starting to pop. In fact, it's actually probably, I think it's about to break. I think it's actually broken out today. We'll go over that chart on another video. But what is so interesting is I just see that 10-year yield starting to move upward, and it's going to pull money out of the market. People are going to move towards safety, and I think the consumer staples market in that sector, the ETF, whatever you want to call it, I think that is going to attract a lot of money because right now those stocks are undervalued and they're paying good dividends, and they're all making money, which is pretty crazy. And if oil starts to come down, then those consumer staples type of companies, they're probably going to generate a little bit more in terms of their margins on their products and such. Because I can imagine that, you know, $100 oil is not so great for consumer staples. But once that starts to reverse, and I think we're probably going to get there by the fall, then you see those consumer staples start to rise. So I'm going to take my time. I'm going to let my cash kind of come in, and I'm going to apply it into the sectors that I'm currently in, and hopefully we'll see what happens come the fall. And I think we'll be pretty happy if we start to deploy in some of these sectors come fall. So that is where I'm going to leave it. Thanks so much for watching. Thanks so much for the new subscribers over on Substack. All the links are in the description of this video, and we'll see you in the next one.